you're doing great today. Thank you for joining us for our training on mastering CDFI, no income verification loans. Let's give it a minute for everything to be up and running. See, we got a few people logging in. CDFI loans are a great loan program. It's a no income verification type loan. Meant to assist underserved communities get the financing that they otherwise would not be able to obtain. So let's see, let's give it another minute before I get into it, because I do see people still logging in. It's a great program. Only thing is, it's not a low down payment program. It's a minimum 20% down program. But when you consider that this program does not check any type of income verification on the borrower, doesn't verify a job, same pricing for primary and second homes. I mean, we're doing one right now for a borrower that lives in New York, owns a second home in Florida. She's retiree, plus she has a job, and then she has some time. She has family that lives with her that helps her with the bills, but obviously that's not listed as income. So how are you gonna document that? The great thing about the CDFI loan is that you don't have to worry about documenting that, as long as you know that the borrower can make the payment. Right? We don't want to just put them into the loan just because we can and just because they have the down payment. Our job as loan officers is to give the proper consultation and make sure that the borrower can actually make the payment. Right? We don't want to be churning loans just for the purpose of getting a commission, and then 3 to 6 months down the road have a borrower defaulting because they can't make the payment because they never could make the payment, right? And it's our job to, even on these no income verification loans, to confirm that the borrower understands what they're getting into with this loan product and that the borrower can actually make the payment. So let's get into it here, and then I'll explain a little bit more of this as we get into the presentation. So CDFI stands for Community Development Financial Institution, right? This is an exemption that allows a loan originated by a CDFI to be exempt from the ability to repay requirements set forth in Section 1411 of the Dodd-Frank Act and Regulation Z. That's quite a mouthful. But if you guys remember, after the meltdown we had in 2008, the Dodd-Frank Act came about and made it a requirement that any primary or second home loans needed to have some type of income verification, right? That's why, for example, hard money loans available through investors, private investors, are only available for investment properties, because primary and second homes need some type of income verification. Now, something to note on CDFI loans is that they are meant for everybody, right? Anybody, as long as they meet the guidelines, can apply and obtain a CDFI loan. However, it is a loan that is meant to assist borrowers that may have difficulties obtaining financing in underserved communities. So if you are a CDFI eligible borrower, you get usually a 0.5%, sometimes 0.625% lower interest rate. So CDFI borrowers would be African American or Hispanic borrowers. So if you are pricing out a loan and your borrower is African American or Hispanic, you check the little box that says CDFI eligible, and you're going to see the lower rate. On this one particular loan that I was just discussing, our borrower from New York that has a second home in Florida, she's CDFI eligible, and the rate is 8.125 compared to 8.75 for non-CDFI eligible borrowers. Now, like I was stating, on the CDFI loan, income is not calculated, nor is employment required, nor verified, right? Almost a slam dunk deal. Long as your borrower has the down payment or the equity, if it's a refi, because they do allow cash out refi, so as long as the borrower has the equity or the down payment and the credit score for the LTV they're looking to do, then full speed ahead, no job required. Now, the mission statement of the CDFI loan program is empowering the dreams of diverse homeowners and underserved communities by providing non-traditional access to prime capital for underbanked borrowers and communities which may have limited income history, limited credit history, and inadequate income documentation. Oh, I do see we got a full house today. Hello to everybody out there. Thank you for joining us. This is a great program to be aware of. However, you got to be aware of what's the best uses of it. So eligible borrowers here are U.S. citizens, permanent resident aliens, and non-permanent resident aliens with U.S. credit and an acceptable visa or work permit, right? Non-permanent resident aliens basically have to have an employment authorization document allowing them to work legally in the U.S. or a visa type that allows them to work legally. Even though they're not going to be working here, they have to have legal status here. Now, eligible properties, we're looking at minimum 600 square feet size if it's a single family residence, or a PUD or a townhome or a condo. But please note that for the condo, it's minimum 600 square feet only. Full review only on the condo loan. So even if your LTV drops to 70% or 75, rather for Fannie Mae, normally 75% LTV is limited review for condos. There is no limited review process for condos with the CDFI loan. I mean, they're already giving you a no job situation, right? Just imagine they did it. We're not going to check the job and we're not going to check the condo association's health, financial health either. That would be too much risk. So full review only on the condos for CDFI loan. That means a full Fannie Mae Form 1076 for, which is the condo questionnaire, but full budget review, everything. If it's a 2 to 4 unit property, minimum 400 square foot per unit. Now, they do allow modular homes, they do allow rural properties, and they do allow log homes. However, do keep in mind that with the log homes, you're going to need comparables, probably at least 1 or 2 log home comparables. So if that particular log home is unique to the area, like all the other homes are regular homes and that's the only log home and you don't have additional comps, you may not be able to get that log home done. So just keep that in mind. Now keep in mind now, modular is not the same as manufactured home, because notice under ineligible properties, they have manufactured homes, right? Most people refer to a manufactured home as a mobile home, which is not correct. A mobile home is basically like a trailer in a trailer park where the occupant pays a lease on the lot. So they let them put their mobile home on the land that belongs to the park. They pay a fee to hook up to the utilities and basically keep their unit parked there. Manufactured home, you own the land. That's a regular home, quote unquote. It's just a different type of home, but you own the land. It's deeded to you, and it has a structure permanently attached. Ineligible properties also agricultural properties, including farms, ranches, orchards, investment properties, right? No investment, just primary, second home. ALFs, which are adult living facilities. Non-warrantable condos, condotels, and projects collecting less than 10% of budget as reserves. Right. That's why we're saying they're very strict on the full review only on the condos. So what are the matrix? Now, again, I would always recommend everyone to always, when you're going to price out your loan, look at the current matrix. This is a guide. This is what is here now. But, these things change sometimes on a daily basis, depending what's going on in secondary on these loans. So purchase and rate and term to get up to the maximum 80% loan to value. You're looking at a 720 middle score. Notice the reserves too. This program does have a high reserve requirement, right? As high as 12 months. It could be depending on the loan to value. And gift funds cannot be used for reserves. So you can use gift funds for the down payment. You can use gift funds for the closing costs, but the borrower is going to have their own money that they can document for the reserve requirement, which can be pretty substantial. Notice 680 credit score is 75% LTV and 660 credit score is 65% LTV, which is the minimum credit score. This program went away for a little bit and came back, and it came back with tighter guidelines. Condos are max 75%, not 80% on the purchase, and 70% on the cash out refi. Same cash out refi in general, 740 middle score gets you the max 70% LTV. And then you can see the grid there, 700 gets you a 65, 660 gives you a 60%. And very important here, the first 4 months of reserves need to be borrower funds and not cash out proceeds. And I can totally understand the logic here because they want to make sure that this borrower has the ability to save, right? That they have a good saving habit, because remember, they're not verifying their job. They're not verifying their income. So they really have no insight as to this borrower's access to funds. So typically, if the borrower does show money, that's their own money that they've been able to save up, that's a good trait for the loan to have. So I'm sure in setting this up, they did their studies, and this is what they came up with, right? As a good hedge for the risk inherently associated with this loan type, where you do not verify income and you do not verify employment. So remember, the first 4 months of reserves need to be borrower funds and now cash out proceeds. They're very strict on the 0 times 30 mortgage history, foreclosure seasoning 7 months, and assets are sourced and seasoned 30 days. So you got to provide at least, you'll need those 2 bank statements, but any deposits have to have been in there for at least 30 days, any large, the fund. So if there's any large deposits within the last 30 days, they're going to ask you to source it to see where it came from. So real important when you're assisting your borrowers structure their deals. Very important to understand, especially if it's a TBD pre-approval, then they may have to wait till the next bank statement comes out so that their money is seasoned, so that large deposits are not questioned and possibly not considered, right? That's part of the job that we do when we're pre-approving a borrower. And in this case, you're pre-approving the borrower, and all you're really looking at is credit score and assets. So real big emphasis on assets. So now, what are the solutions, right? This is where it gets good. This is where, this, allows you to be able to use this as a great tool, helping your borrower structure their deals, and then possibly get you another loan a year or two down the line once they've resolved whatever is a situation that caused them to have to get this loan. Because not every borrower that gets a CDFI loan is a borrower that does not have a job. We had one, for example, that they got paid in stock options. Their stock options were going to be collected, as we like to say, within the next 6 to 8 months. They would be able to show those stock options as income, but right now it was still a work in process for their situation there with their business. With that's how they were getting paid the majority of their income. So we ended up putting that one in the wife's name, who had great credit. They were buying this like $1.5 million home, and then they were going to put their current home for sale calmly, so that they could sell it, market it properly, not have to do it as a fire sale, and so that they could move, all their stuff over after they did the work on the house that they bought, that they wanted to do some remodeling. So great deal there, right? You got your current home, can stay right there. You're buying the new home. In this case, it was a primary because it was bigger than the one that they owned, but they were able to, keep both homes at the same time, no income verified, as long as they came up with the money that they had to come up with. And then down the road, they were going to sell the other home and probably refinance out of the higher interest rate, because these are a higher interest rate, obviously, than regular loans. Refinance out of the higher interest rate CDFI loan once the stock options came in and the income situation was clear. So solutions would be, for example, a relocating borrower desiring to buy a property and move before accepting new employment, right? So again, borrowers in New York, let's say, wants to move to Florida, hasn't accepted a job yet in Florida. They're still looking. They want to make sure they accept the best job. They don't just want to accept a job just to have a job to verify income. They would prefer paying a little bit higher interest rate on the loan, assuming they have the down payment, 20% down, and then take their time, accepting the best job for them. Maybe it's a combination of a higher earnings, better conditions, whatever it may be, but they don't want to rush just accepting any old job. So you can do that as long as obviously you have reserves to cover those couple of months while you're not working that you're going to have to make a payment. So that's one good solution that this program provides. Another one is borrowers working in a cash-based or service industry who may not claim enough net income, right? We got plenty of people out there that work in the service industry that get paid a nominal hourly fee and then maybe decide not to claim any of their tips or very little of their tips. But they have a lot of money, right? They have a lot of money saved up. They make a lot of money every week. They just can't show it in a pay stub. That's fine. 20% down, at least if you got that good credit, and you're in. So we crypto people, right? That's one where we've helped a few crypto people with CDFI loans, right? They got the money in the bank, they got the crypto, but they don't have any income that they're declaring. That's not a problem. We do those all the time, right? That was the next bullet point there. Borrowers investing in assets like cryptocurrency where it may be difficult to document the net income. Or private borrowers who do not want to share their tax documents. We get those every now and then, right? You may get some high net worth individual or some kind of a famous person that doesn't want to show you their earnings, don't want to show you their tax returns. They don't want anybody probing into their companies. Maybe there's some trade secrets there that could be given away on their business structures, and they would prefer paying a little bit higher interest rate than divulging all of their trade secrets and their personal information, where it could possibly be viewed by who knows who. And then I'm not saying that any of our MLOs would do it, but you never know what can happen with the paperwork. So some people are just very private, and they'd rather make the choice of going this route rather than having to provide tax returns that they do have. And then on the other end of the spectrum, there are self-employed borrowers who are taking too many expense write-offs, right? They would happily give you their tax return, but unfortunately, once you get the tax return, there's no money there. There could even be negative income, right? they wrote off more than they brought in. So now you have a situation there where obviously they don't qualify for full doc. So then if, for example, if they do not qualify for a bank statement and maybe they don't qualify for a profit and loss loan, you always have the CDFI loan as long as it's primary or second home and they have the minimum credit score required and the down payment. And then the last bullet point is the one that I touched on first in my example: borrowers looking to buy a property before they sell their current property, right? So as long as they have the down payment and the reserves for the one that they're going to buy, they can keep the one that they have and then turn around and sell it for maximum dollar instead of having to market it as a fire sale. And that is actually our last slide there. But now let's get some questions here now regarding who provides the lender that provides this, because this is a wholesale program where we wholesale it. So we do have multiple options for that. So, I mean, you can always reach out to your mentor, come to the live support Zoom room, and we can help you structure your CDFI loans. But we, the mortgage calculator, would be the broker on that loan product. So, mortgage calculator does offer all of those. So come on, guys, give me some questions there. I see there's quite a few of you on here, and we have gotten a couple CDFI loans actually submitted in the last couple of days. So there's people out there loving this product for all the different reasons that I just mentioned here. So I'm going to give it another couple of minutes to see if we get any questions. Rates aren't so bad on this, but one thing you do have to be aware of this product: it is a wholesale channel product, and it is a borrower paid product. There is no lender paid compensation on this product. So what that means is that there is a broker fee that the borrower pays as part of their closing costs, and it's a 2.75% broker fee is the cost to the borrower, plus whatever loan discount fee there may be that they may have to pay for the interest rate that they chose. So got a couple questions here. Okay, so we're being asked here more or less, what is the rate? Well, again, the rate is going to depend on the credit score and the loan to value and the transaction type. For example, the one that I helped out on yesterday, borrower had a credit score above 740, right? The loan to value was very low. Loan to value was like 52%. Cash out refi. The borrower is CDFI eligible. So remember, CDFI eligible would be your African American or Hispanic borrowers, right? So she is CDFI eligible, and the rate that I was able to provide for that one was 8.375. So it was an 8.375 rate. It had a loan discount fee of 0.625. So that's not bad at all when you consider what we're getting into. And it was a cash out refi, so no income verification, no job verification, and on top of that, it is a second home. This was the second home borrower that lives in New York and has the property in Florida. So 8.375 for a CDFI eligible borrower, paying 0.625 in loan discount and paying 2.75% in broker fee. Okay, now we got another question. What is considered an agricultural property? Well, a farm, a ranch. I mean, they're not going to consider it agricultural just because it has a big piece of land on it. Even though the program is limited to maximum 10 acres of land, you could be 10 acre in a rural area, or even 10 acre in a suburban area if they're all big lots, and not be considered agricultural. But once you got like a working farm, right? Like the land is being used to generate income out of farming, then that's agricultural property, right? So it's not necessarily because of the zoning Because, for example, my home has an agricultural zoning, but I am in the middle of a a highly populated suburban area. It's just it was zoned 80 years ago as agricultural zoning when that's all there was in the area where I live were horse ranches. But it's not, my zoning has nothing to do with the property use. Now, I got a question here which I don't totally understand. Business purpose loan for companies. No, this is for primary and second homes only. This is a loan meant to assist borrowers that can otherwise not qualify for a home. For business purpose loans, no income verification, we already have that product. It's called a DSCR, debt service coverage ratio loan, where the borrower is qualified based on the gross rental income generated by the property, not by personal income documented through a job. So in the DSCR loan, no income verification from the borrower, no job verification from the borrower, only analyzing the gross rent generated by the property. And depending, we have those that require you to be at 1.0 or above, and we have options that let the debt service coverage ratio be below 1, which means that the rent is not covering, that the rent is not covering the housing expense, and we'll still do the loan as high as a 75% loan to value. So that's DSCR. That's for investment properties. This one here, though, primary, second homes only. And another question about interest rate, primary range, 7.5. I don't know. We really would have to price it out. On all of these, it's all going to depend on the loan to value and the transaction type and the credit score. So purchase will probably have 0.25% lower interest rate than a cash out refi will. So I don't really think that you're going to get anywhere near 7 or 7.5 there, Tammy, on this product, because if the one I priced out yesterday was 8.375 as a cash out, it would be 8.125 as a purchase, and that one was 52% loan to value with a over 740 credit score. So I don't think you're going to get anywhere in the sevens unless maybe there's a big buy down fee you could get. Then the borrower pays like 2 points or something like that, you'll get in the sevens. But this one was 0.625 loan discount fee. Okay, that's a good question there. One borrower is Hispanic and one is not. Can they still utilize the discount? That's a good question. I don't want to assume anything, but it would appear that you could. But that would be a good one for the AEs, right? This and again, the program specifically, when they talk about CDFI eligible, African American and Hispanic only, that's the two groups that right now they would consider CDFI eligible. Because we had a question, what about borrowers of other races? So yeah, I got a couple of people. I love the comments, right? This is an amazing program. Got another guy saying, wow. And definitely you're welcome to those that are thanking me. And this is a real amazing stuff. And I got somebody else saying, wow, I just spoke with a lady yesterday that might like this product. Yeah, that's why we like to have these trainings, because I analyze the trends. And even though we had this training about 4 months ago, I like to repeat them exactly this, because whoever's on here now wasn't who was on here then. And even though we have all of these trainings recorded, I think it's good to prompt people to come on, share the newest information on it, and also see what kind of questions you may have. And you may have a borrower for this right now. And when we, provided the opportunity to offer it, I'm sure there's some people that are going to go now and reach out to their prospects, and hopefully, I'll be seeing you in the live support Zoom room, helping you structure your CDFI loan. just like I was helping another MLO yesterday structure their CDFI loan. So I don't see any more questions. Let's give it another moment. Okay, do we have flyers for this? There should be. We have a bunch of compliance approved flyers for our loan programs. So you should be able to obtain something for this. All right, you got it, Nico. I don't understand the question, and only for agricultural property zoning. Don't understand that question. So if you could maybe expand on it, what you mean by and only for agricultural property zoning, I'd be more than happy to help you out. Where do you find properties that have only agricultural zoning? Is that your question? I mean, whenever you're looking at a property, you can look at the public records on the property, and you can see the zoning, if it's a zone for residential, if it's zoned for multifamily, if it's zoned for estates 1 acre, if it's zoned for agricultural. In some cases, they may not even have any zoning, and they never got zoned, and the area got all built up. So it's not necessarily an issue, because at that point, the property use would be the issue. No, Tammy, this program is not only for agricultural zoning. I'm not sure where you understood that. What we were saying is that this program is not eligible for agricultural properties like farms, working orchards, you know, tree farms or regular farms where they're making money on it. That's a business, and that's not what this is for. This is to finance a residence. All right, I'll give it another minute. I had quite a few questions on it. I really love the enthusiasm, and it usually ends up being that way when somebody hears about this cool program. Now all they need is at least 20% down, and they got to meet the reserve requirement. So just let us know how we can assist here at the Mortgage Calculator with your CDFI loans. We have a whole slew of products out there, outside the box stuff like this, as well as our other non-QM offerings. And we usually make things happen where other people get denied. The Mortgage Calculator approves them. Yeah, well, if you search CDFI, the phrase that, excuse me, that may not necessarily get you what you're looking for. So just please reach out to us, and we'll be more than happy to provide you the guidance. You can, if you're not one of our MLOs, you can reach out to us, the company, or to our MLOs for guidance. And if you're one of our MLOs, you can definitely reach out to all the resources that you have. Including your mentors, including our live support room, and we can help you structure your CDFI loan quotes and your CDFI loans. All right, everyone, thank you so much. Great stuff today. I love all the questions. I love the enthusiasm, and I really hope that that's going to, I know that's going to result in some CDFI loans being originated in the next couple of days and coming weeks. So everybody have a great rest of your day, and I will see you next Thursday. Have a good day.